morning, everybody. Hope everybody's doing well here in November. It feels like an eternity since we've last did these PPP webinars. And I thought I was done in May, but as we sit here on November, whatever it is, we're still going through changes with the PPP program and still some unknowns. And there's two pretty big unknowns at this time. I'm trying to get confirmation to make sure that my presentation can be seen. It is good to go. All right. So let's get started. And so I kind of changed it up. I'm not going to go through the how you got the money. I'm really just going to talk about forgiveness, and then talk about some planning and discuss which applications you're going to need to do and when to do it. So there's three applications as we sit here today, and I joke about that because the latest application was just added probably about a month and a half ago. So there's the SBA 3508S, and that's for any loans less than $50,000. So if you have a loan that you received that was less than 50 grand, use that application. It's straightforward, and most of this presentation is not even going to be relevant to that application. The next one is the SBA 3508EZ, and there's three different criteria that allow you to use that EZ application. You're self-employed and have no employees, so you file on a Schedule C, and you have no employees. You did not reduce any salaries or wages by more than 25%, and did not reduce the number of employees or the average hours that they worked. So again, if your employment has been steady, you haven't changed anybody's compensation by more than 25%, you can use the EZ. The next one is a little bit more broad, and I can make the argument that every single one of us can use this application based on this last statement. So you experience reductions in business activities as a result of health directives related to COVID-19 and did not reduce salaries or wages of any employee by more than 25%. So what that's saying is you could have a workforce reduction, but if it was because of COVID-19, which is the main reason that more than likely you would have that reduction, potentially you could use the 3508EZ. And there's just less things that you have to file and include with that EZ application. So if you qualify to use that EZ application, I would recommend using that application. And then everything else that doesn't fall in the first two buckets is the SBA 3508. So the forgiveness is in section 1106 of the CARES Act, and it's been tweaked a few times now, and it's going to have to be tweaked again. So today, well, at least let me back up. When this was passed, this was the forgiveness of the loan was supposed to be on a tax-free basis, and then you can see my maybe with a couple exclamation points. Because at the end of April, the IRS stepped in and said, issued a notice 2020-32 that said, okay, the forgiveness is not taxable, but the covered expenses that allowed that forgiveness to be forgiven are going to be non-deductible. So essentially, it's a backdoor to making your forgiveness taxable. The intent of the law was not that intent. From everything that I know, from some of the folks that I've spoken to, some down that work with Congress, both sides want to fix that piece. They both agree, and they've agreed since June to fix that piece. But with all the dysfunction down there, and I guess there's going to be more dysfunction after this election, I don't know when it's going to get fixed. If I had to predict, it's going to be fixed the last week of December, which creates planning challenges for everybody. Because Am I going to get to deduct those expenses, or am I not going to deduct those expenses? And what's my projected taxable income? So we're going to talk about that a little bit further in this presentation. So what payments are deemed covered? And I do apologize because a lot of this is repeat, but I don't know who's on, so I just want to make sure that I cover everything. So payroll costs, covered mortgage obligations, covered rent obligations, and utilities. The limit on the forgiveness can't exceed the note. That makes sense. However, the last time I did this presentation, the covered expenses couldn't exceed that note. But if you work through the application, and I can tell you that Blake and myself and Sam and myself, we've been going back and forth on, can you actually have more covered expenses to help out with the forgiveness if you do have a, FTE reduction? And Sam must have asked me 3 or 4 times, and I was relentless with my answer, saying no. But when I finally actually sat down and just went through an application, the answer, I think, is yes now. I don't think that was the intent of the law. And the reason why it's made possible is because they increased the covered period for some or all, if you so choose, to 24 weeks. So even if you have a FTE reduction or salary reductions, you still can get all forgiveness here because of the 24-week cover period. And we're going to go through some examples at the end of this presentation. The forgiveness can be reduced if you, as I've been alluding to, if you have any full-time equivalent reductions and you reduce pay of any employee by more than 25%. So the covered period, right? That's the time that you have to spend that money. So prior to June 5th, you have an option. You have the option of 8 weeks or 24 weeks. Loans made after June 5th, because I think that was the third act or third amendment to this act, they increased the covered period to 24 months. They mainly did that for the restaurant industry, right? Because the restaurant industry was essentially shut down in April and May. But it didn't specifically say restaurants, but that's why that was put in. So the cover period begins on the day you receive the funds. And then there's another decision that you have to make, and whether you use an alternative payroll cover period. I think it's less important now that there's a 24-week option than just the 8-week option, because if you recall, we've had a lot of conversations of whether we can squeeze in a 5th payroll in that, and then if my time is accrued, when do I, and it's paid after the covered period, do I get to deduct that? So they allowed you to come up with this alternative payroll covered period. So if you're a biweekly or more frequent pay schedule, you could elect the alternative covered period, and that covered period would begin on the date of that first payroll, and it only applies to it does. I say it this way: it does not apply to non-payroll covered expenses. The non-payroll covered expenses would still be covered under the 8-week or 24-week period. Again, if you choose the 24-week covered period, I think the alternative payroll cover period really becomes moot at this stage. Payroll costs. What's eligible for payroll costs is payroll costs and payroll costs incurred during the cover period. Payroll costs are considered paid on the date the paychecks are distributed. Payroll costs are considered incurred the date the employee pay is earned. So they're giving you a lot of outs, right? This is where you're able to, where I say here, you can potentially get a 5th payroll in that 8-week covered period, and it does, because even if the payroll was earned and you paid it after that 8-week period, it does apply in the cover period. So it allowed that 5th payroll. As I said, I guess a couple of times now, it's not relevant if you have it's not as relevant. It could be relevant because some businesses have been really hit hard and they may need even more than 24-week period to use all their covered expenses. But I just don't think it's as relevant. So payroll costs, what does it equal? It's compensation for wages, commission, salary at a rate not to exceed $100,000. For self-employed, it's net earnings from self-employment income up to $100,000. Again, that's annualized. Compensation for employees only is limited to $15,385 if you use the 8-week covered period, and $46,154 if you use the 24-week covered period. And I emphasize that's for employee only. There is a difference, which we'll get to, for employee owners. Cash and tips are included in that. Vacation, parental leave, medical leave, sick leave, all included. Severance, any type of pay is essentially included in that. Group healthcare benefits and health insurance premiums are all included. State and local tax on compensation employees. What's not included is your payroll tax match, right? The 6.2 for Social Security and 1.45 for Medicare. That is not included. That always surprised me that it wasn't included, but it's not included. The employees have to have a residence in the United States, and the qualified sick and leave time where you received credits under the CARES Act, those wages do not apply. So here's owner's payroll. You think if you're an owner of a business, you'd be treated the same. But here I have 4 scenarios where it's different almost in every single one. So if you're an owner of a C corporation, your compensation cannot exceed the rate of pay of $100,000, but it does allow you to include your health insurance premiums and include your retirement contributions. So essentially you're treated like an employee. No real difference except for the max compensation, which I'll get to. As corporations, same thing, it's your compensation, not to exceed 100,000. Your employer retirement contribution is allowed, but health insurance is not eligible. And the reason why is because that's supposed to be in your W-2 at the end of the year, so it's treated as compensation. Schedule C or Schedule F taxpayers, net income not to exceed 100 grand, but your health, retirement are not eligible for covered expenses. And then general partners or LLC members, essentially you take line 14A, which is your self-employment income, less section 179 multiplied by 0.9235. So there's going to be a test on this. We're going to send out a survey and see if you guys get that one right. That's just my little bad joke. But your health and retirement are not eligible. So you can see I have 4 different scenarios where I can be an employee owner, and I have 4 different scenarios how I come up with the compensation. But what is the same for employee owners is that if you use the 8-week cover period, I can't have more than that $15,385,000 worth of compensation. But if I use the 24-week covered period, I can have $20,833 of compensation for the owner-employee. Now that $20,833 under where I'm allowed to use the health insurance and the retirement contribution, that's above and beyond the $20,833. So eligible, the non-payroll costs have to be paid during the cover period, or incurred during the cover period and paid after the next billing date. So it's kind of like that 5th payroll. One of the changes that they made in the 2nd or 3rd rendition of the PPP program is non-payroll costs can now be 40%, cannot exceed 40%, where the first rendition was it could not exceed 25%. So somebody who's not as labor heavy and maybe more facility heavy with rent, that helped out people. Covered mortgage obligations. It's a liability of the borrower. It's both real and personal property. You know, again, when this was early on, there was some grade around whether it included leases on equipment. And I always took the position that it did, but they did clarify that when the application came out. The lease would have been occurred prior to February 15, 2020. February 15, 2020. If you do have a building in your business, well, in equipment loans, you can't deduct you cannot use the principal piece as a covered expense. So if your payment is $5,000 a month and $4,000 of it was interest and $1,000 was principal, you can only use $4,000 as your covered expense. I left this note in there from the last presentation because early on, some banks sent guidance that said interest on personal property was not allowed. And it's clearly allowed by the law and clearly allowed by the application. Covered rent obligations. Again, real property and personal property all are included. So if you have a lease agreement prior to February 15th and you're paying rent, that's a covered expense. The application does state personal property that's allowed. Originally, there was some grayness. I always thought it was included the way the text of the code read. I kind of put in bold letter there about related party rent. So if you own your business and you own your building outside the business and you're paying yourself rent and you have no mortgage on that building, then that rent is not going to be considered a covered expense. You're going to be limited to the interest expense that the lessor is paying. So it's a little bit more complicated because now you got to go figure out the interest of what you're paying as opposed to just taking your rent expense. Covered utility payments, electric, gas, water, transportation, telephone, and internet. Nothing like that has changed. Trash removal is excluded. The amount eligible for forgiveness is reduced, again, by how many FTEs you have. So we had to determine our FTEs, and remember we had 2 periods that we could determine our FTEs. It was January 1st, 2019 to June 30th, or we could use February 1st to February 29th of the current year to see what our base period is. And then we had to figure out what our full-time employees were, or our full-time equivalents were during our covered period. So if you use the 8-week, your period that you have to test that against is June 30th. If you use the 24-week and apply immediately after that 24-week, you have to check how many employees you have at the end of that 24-week period. If you wait until next year to file for forgiveness, you can use December 31st to determine whether you are back to where your FTEs were. So definition of a full-time equivalent, 40 hours equals a full-time equivalent. The maximum of each employee can only be 1. So if somebody's working 45 hours a week on average, they can't be 1 plus something. They're just going to be capped at 1. And everybody else is going to be rounded to the nearest 10th. Or you can use the simplified method, which is it gives you 1 for everybody who's working 40 hours or more, and all others are going to be half of FTE. So if you use the simplified method, you got to use that both in your base period and your covered period. And you can choose which one works out better. There could be a scenario where one works out better. So let's take, for the example, somebody working 35 hours a week, but because of COVID and they have children at home because they're not in school, they only can work 15 hours a week. Well, I think the simplified method, if you have a lot of those examples, would be better because whether they're working 15 hours or 35 hours, they're going to be a half a person equivalent, both pre and post Whereas if you use the definition, you're gonna be short on that one employee. So figure out which works best for you. So now there's a couple of safe harbors. There's safe harbor number one. And to me, this is as broad as that statement, that third statement that I talked about you in the application. I think we can make an argument that almost every one of us, there's exceptions to that, that we can fall under this exception. So let me read this. The borrower in good faith can document that it was unable to operate between the end of the covered period at the same level of business activities as before February 15, 2020, due to compliance with requirements established by guidance issued between March 1 and December 31st by the Secretary of Health and Human Services, the Director of Centers for Disease Control and Prevention, or Occupational Safety and Health Administration, related to the maintenance and standards of sanitation, social distancing, or any other worker or customer safety requirement related to COVID-19. That's a really, really, really broad statement. Everybody that I speak to, all my clients, our firm, we're working differently. And we're working differently for a variety of reasons, and it falls under that. So I definitely can make this case, I believe, for a non-essential business, that I would fall under this. If I'm an essential business, and we as CPAs, believe it or not, turned out to be essential because they wanted their tax revenue with their tax return. But if you're a non-essential business, I feel like we could fall under that safe harbor. Safe harbor number two, I'm not going to read this. I took this directly out of the code, but what it essentially is saying, it's the original safe harbor that if you got back to full employment by June 30th, and now we have to add by the end of your cover period if you file, or by December 31st, if you got back to full-time, full employment as compared to the base period, then safe harbor number two applies. So we also have help here in terms of getting reduction if somebody, we let them go, we tried to rehire them, and they chose not to come back for a variety of reasons, whether they had children issues or they're afraid of coming into the workplace because they could be compromised. As long as all of this is documented, that you tried to hire the person rejected the offer, that person's going to count as a full-time equivalent, even though they're not on your payroll. And anybody that was fired for cause, voluntarily resigned, or requested and received a reduction of their hours because of anything going on with COVID-19, they're not going to count as a reduction in the exemption. The forgiveness is also reduced by the amount of, if we have, the amount of forgiveness would be reduced if you reduce somebody's pay by more than 25%. So if you were paying somebody $1,000 a week, and you said, hey, because of COVID, business is down, I can only pay you $500 a week, and they kept working, we would have a reduction of that $250 a week that would reduce the amount of forgiveness that we'd be eligible for. So here's a good example. An employee of X company earned an annual pay of $70,000 as of March 2020. After X code takes out the Paycheck Protection Loan, A salary is reduced to $40,000. This was greater than 25% decrease in A's wages. Thus, the forgiveness amount of 440 is reduced by another $30,000. So the total forgiveness, and this was an example that was ongoing, but this particular example, they lost additional $30,000 of forgiveness. Restoration, again, the same clause that we had with that safe harbor number 2. If you got back to full employment by June 30th or the other 2 periods, if you restored their pay by June 30th or by the end of the covered period, if you filed then, or by December 31st, then that reduction of potential forgiveness goes away. Applications for forgiveness, the lender has to make it within 60 days. The lenders that are accepting applications right now, they seem to be way within that 60 days. I just got another one today that I think they applied the last week of October and it got approved by the bank. So that was literally less than, let's say, 10 days. However, it's not just the bank approval, you have to get SBA approval. And you don't have to do anything there, that the bank will take care of that. I've only have one client so far that got bank approval and SBA approval. And they were literally the first PPP loan approved by this specific bank. And they were the first PPP loan that got approved by this bank by the SBA. So they stayed number 1. So they were definitely on it. The documentation, you got to document the number of full-time equivalent that you have on payroll. So you're going to use your tax filings, unemployment insurance forms, any canceled checks for non-payroll costs, and a certification that information is true and correct, and the amount of forgiveness requested was used to retain employees, which I think is going to be a correct statement for everybody. So I get this question almost on a daily basis: when should I apply? And there's really no right reason or wrong reason here. Should I apply now? And if you have everything together, especially if you qualify for that EZ form, there's no reason why you shouldn't ask for forgiveness today. And just get it off, and you can check it off your to-do list. Should I do it when my covered period ends? Because there's some people that are still within that 24-week covered period. Or should I wait to 2021? So some people think that waiting until 2021, if Congress does not fix the problem that the IRS notice 2032 created by saying that deductions were non-deductible, think that they could defer the income into 2021. And I just don't think that's accurate, because it's not the forgiveness that's taxable. It's the deductions that are being disallowed. So the covered expenses that are disallowed are in this year. So I think whether you apply for forgiveness in 2021 or you apply today and get the forgiveness and Congress has not fixed that problem, it's the income effect is going to be in 2020, not 2021, regardless of when you file. So I would want to know, do I got that forgiveness so that I can at least plan accordingly from a worst case standpoint if Congress doesn't fix that problem. The other thought is, do I apply now or do I wait now that the election's over? Because maybe they'll continue to simplify this. But every time they've touched this thing 3 times, and we've gotten, I can't think of how many FAQs we've received, notices that we've received. So let's say they've touched this 20 times, between the SBA and Congress. every time they touch it, it creates more questions. So, and I'm going to go through another issue here for folks who received a loan of more than $2 million in this, that just really popped up last week. So I don't think it's going to hurt you to apply now, especially if you have no FTE equivalents. You're going to get the max forgiveness. It's just like, get it done, get it off your plate. Be a nice early Christmas present. Pay hazard pay and bonuses work, but I just don't want to use the word bonus, because bonuses, when employment is tough, is just a bad word. So I would just call it hazard pay. It's semantics. Prepay your 401k match and profit sharing to get it into that covered period. You know, and then I say get back to your full employment if possible by June 30th, December 31st, or when you apply for that forgiveness, right? Because there's three different dates now, or you meet the exceptions. And I go back to that safe harbor number one. I can almost make an argument for most of my clients that everybody meets that safe harbor. So the reduction in FTEs or reduction of pay may not apply. So miscellaneous issues, as you may know, they're going to audit loans in excess of $2 million. I talked about the IRS notice 2032. But this last bullet point I want to touch on, because this, I just became aware of it last night as I finished my presentation. And it was issued on October 26th that the SBA asked the Office of Management and Budget for this new form 3509, and it's a business activity assessment form. I have no idea if this is going to have any effect on them saying that you are eligible. Again, this is only for folks above $2 million in PPP. That you were originally eligible for the $2 million and whether you're eligible for the forgiveness. Because they're asking questions like, what was your revenue in the second quarter of 2020? And what was your revenue in 2019 for that second quarter? What was your revenue in the first quarter of 2020? And they're almost looking at, you know, if the business didn't have a hiccup, so to speak. And we all have a lot of businesses that have done very, very well during this time frame. But when they got this loan back in April and May, there was no such thing as a business activity assessment. So it does concern me. And I know I personally have 2 clients that got more than $2 million, and I sent something out to them today about this. Again, I don't want to get anybody to be scared about it. I just want you to be aware of it because it's out there. And I don't know what's going to come of it. So it's one of those examples is we're touching this thing and I feel like we're moving the goalposts. And it's a concern. Why are they asking for that information if it's not going to have any effect on your ability to get the money originally and get the forgiveness today? It's a concern. So I've had 2 clients sell in this pandemic. I have another LOI on another client. And again, this is another thing that came out at the end of October, that if you sell 20% of your stock or sell at least 50% of your assets based on relative fair market value or merge with another entity, and this last sentence makes sense. This doesn't scare me, right? The PPP borrower remains responsible for the loan, certification made in connection with the loan, and compliance with all PPP requirements. That makes sense. Nobody's going to assume that obligation. The SBA wants you to assume that obligation. So that makes sense. But I'm not going to go through all this, but if you are selling your business or thinking about selling your business, we probably should have a conversation about it. And the one thing that I know you need to do is you need to do disclosure with your bank. Again, I don't know of any negative effect on the possible forgiveness that's allowed on this. It's just added regulation and added things that we need to do. So if you are selling your business or have sold your business, and two of the businesses that sold for me were back in June, before this was even issued. They haven't got their forgiveness yet. We're going through that process now. But because they didn't give notice, is that a problem? It shouldn't be, because this was issued in October. But the one that have an LOI now, they need to give notice to the bank. And the bank needs to give notice to the SBA. Tax planning. I talked about, if the loan's forgiven with no changes from Congress, where do I pick up the income? Yeah, I think it's 100% that your income effect is this year. It's not 2021, because it's not the forgiveness that's taxable. It's the deductions that are disallowed, and the covered expenses were this year. So how do you plan, right? For the last 20 years, since really since 9/11, so 19 years, it's been really hard to plan, because we've had a lot of 2-year acts, and things expire. And so the last tax bill got passed at the end of 17, and we kind of had a 7-year runway that we knew what the rules were. Now, with potentially a new president coming in, there may be new rules. I think from a taxpayer standpoint, because it appears that the Senate may stay on the Republican side, that there'll be gridlock from a tax standpoint. So we may be able to keep what's been in play for the last couple of years. And I'm going off base here about PPP. So for those of you that are getting the qualified business income deduction and the lower tax rates and the depreciation rules, that may stay because of the gridlock that we may have in Washington. I always think gridlock is good when it comes to taxes, because they can't change anything and we know the rules. But I do believe in my heart of hearts that they will fix and get back to the intent of the law, which was this was a non-income effect for tax purposes. But you still got to plan accordingly until we get that notice. You can't take my word on it. So the directive that I gave out to our team is, what's my projected taxable income if those covered expenses are disallowed, and what's my taxable income if they are allowed? And plan over the next 2 months during our planning season, when we're doing projecting of tax liabilities and cash flow. From a cash flow standpoint, plan for worst case scenario, because we might not have this answer to the last week of December or the first week of January or later, quite frankly, because of the dysfunction that is what we call Washington. I also talk about, do we want to create a net operating loss? And a lot of us, we're going to be able to create a net operating loss, especially if Congress fixes the deductibility of these covered expenses, because they also, in the law, they changed it that you can carry the loss back 5 years or up to 5 years. So taxes that you paid in 2015, you can never ever get unless you have a net operating loss. So I'm a big believer, especially if you paid at a higher tax rate back in 2015, you want to go back and get those taxes as opposed to carrying the loss forward, because you can never go back and get those taxes in 2015. You might be able to do something in 2020 or 2021 or 2022 by to reduce that tax liability. So if you're able to create a net operating loss this year, and you paid significant taxes in 15 and 16 or 17, it makes sense to create an NOL. So talk to us on whoever you're working with on that's doing your tax planning for this fall. So here's how some applications. I kept them really basic. So this is the 3508. This is not the EZ. So in this example, they got an $800,000 loan. They had 50 employees at the time of application, 45 at the time of forgiveness. And I didn't fill all the other things, but in this case, we chose the 24-week covered period. So my payroll costs are $1 million. It doesn't say limit it to $800,000. It just says put your payroll costs in. So this is where I said that covered expenses can exceed the amount of the loan. They had rents and some utility payments. So they had total expenses of $1,130,000. And I just did a real quick calculation, right? So their FTE reduction was 10%. So the maximum forgiveness that they could get is $1,017,000. The loan was $800,000. I don't know if you can see my little arrow here. And then I also have to divide my payroll costs by 0.60. The application here still has 0.25, but or 0.75. It should be 0.6. So the max I could have is $1,666,000. But then you take the lower of the 3. So I get to 800,000. Where if I had to cap my payroll expenses, I might not get to $800,000 in forgiveness. And you're going to see it on the next. I got 3 more examples. On one of the examples, you're going to see where it gets that I don't spend the money, but I don't have as much reduction of the forgiveness as I might otherwise have. So same example, I borrowed $800,000. My employment's still the same, 50 at the beginning, 45 now, but my payroll costs are $600,000. My rent is $120, utilities 10. And in this case, I threw in that I had an employee that I lowered compensation by more than 25%. So I put $30,000 in there. When you add all those up, I come up with $700,000. My full-time equivalent ratio is 90%. So potentially I can only get forgiveness on $630,000. My PPP loan is $800,000. I'm checking to ensure that my payroll was 60% or more, or not less than 60%, I should say, on that $1 million. So in this case, they were only able to get forgiveness of $630,000, and they would have a loan for $170,000. I don't know. That's not really a realistic scenario, because if my employment only went down 5 days and I chose covered, and I chose the 24-week covered period, it's probably not realistic. So then here is, so this is an example where maybe I'm not labor heavy, but I am facility heavy. So I lowered my payroll costs to $400,000. Business rents are $400,000. My utilities are $40,000 because I'm heavy. I have a $40,000 reduction because I lowered somebody's pay by more than 25%. So my total costs are now $800,000, which is equal to the loan, but I got to take that equivalent, right? I have 90% of the employment as before. So potentially 720 is my max forgiveness. My PPP loan is 800,000. But in this case, my payroll was below the 60%. So not only did I get limited to 720, I actually got limited to $666,000 in this example, because my non-payroll costs exceeded 40% of the total covered expenses. So So this is a business that really got hurt. They cut their employment down in half. Same loan, $800,000. Their employment is cut in half. That $1,920,000 in payroll, that is real. So I went, I said, in order to borrow $800,000, what would my monthly payroll have to be? And I calculated that out. And then I extrapolated that out for 24 weeks. So even with my employment dropping in half, my payroll is going to be $1,920,000. My rent's $120,000. My utility payment is $24,000. So I have total cover expenses of $2 million, $2,064,000. My FTE reduction is 0.5. So comes down to $1,032,000. My loan amount's $800,000. To figure out whether I had at least 60% of payroll, I did. But so in this case, you can see my employment went down by half. I'm still getting my forgiveness. So this is a realistic scenario for people who got hurt really bad during COVID. So the fact that you went from an 8-week covered period to a 24-week covered period to utilize those dollars is going to help you get maximum forgiveness. If we did not have the 24-week covered period, this scenario would look dramatically different. The forgiveness would probably be closer to about $300,000 or $400,000. But that 24-week cover period really helped folks out. And I say this, the government does not want this money back. I know it's hard to believe, but they don't want it. It's spent, it's been budgeted, it's out. They want it. The banks don't want this money. They don't want this loan in the books for 1%. Everybody wants to get forgiveness. You, the taxpayer, your bank, and the government. So by some of the changes that they did make, have made it easier to get the forgiveness. So that's the end. I'm gonna see if I can find my questions here, but please, Ed, send me any questions that you have, and I will answer them and the best of my ability. But thank you for your time today and coming out. It's been a crazy year for all of us. We as parents are now teachers, trying to work from home, and it's been difficult for us, and it's been for everybody. So we look forward to continue working with you all, and we are here to help. So any questions that you have, please list them. I'll go through them, and then if any other questions pop up after that, please feel free to email me or talk to whoever you work with here at Stefano Slack. And thank you again for your time. I wish I could see all your faces, because I like to see faces to see if I'm actually making sense, because sometimes I don't make a lot of sense. At least my kids tell me that all the time. And when I see perplexed faces, I'm able to kind of tweak what I'm saying, or repeat what I'm saying, or change how I'm saying it. So, but we're stuck with Zoom. First question is regarding interest payments. We issued a promissory note in 2018 for a former stockholder to repurchase stock. We paid principal and interest. Is the interest eligible to be used on the Forgiveness Act? That's my client that just asked that question. I work with him. I'm going to say it probably is excluded, but I think I can make an argument that it's included. So I'm playing a little attorney here, where I don't really give you a black and white answer. Because that obligation was prior to February 15th, I think there's a chance that it would be included. But knowing your situation specifically, I don't think you're going to need it. If you apply now for forgiveness, receive forgiveness on a large portion of the loan, but some portion is disallowed, can you reapply for forgiveness if the rules change in the future and it gives more favorable position to allowing the disallowed portion? So if you're not going to get forgiveness yet, I would wait. because let's see what additional changes that are out there. I can't answer the question whether you can apply for more forgiveness the second time because there's nothing out there. But I think I would wait if you're not going to get full forgiveness. I didn't, somebody's asking if I have a sample of Schedule A, and I probably would screw up my whole presentation or screen here if I did. So I did not put a Schedule A. I thought that was going to get too complicated on Zoom. There is the AICPA put out a calculator, and I can send it to y'all. Matter of fact, I think I might just send it to you, all the participants that were on today, so that you have it. I haven't gone through it. It looks really complicated. Sometimes when you don't design the spreadsheet, it's hard to follow. But I'll send it to you along with the presentation, and so that you have it if you so choose. But I think creating your own Schedule C in Excel, I think is easier than potentially using the AICPA forgiveness. And again, I go back to safe harbor number 1. Do I qualify under that? And I think I can make the argument that most of us have been affected by this. So this is a great question. Are there any state income tax consequences from of the forgiveness? And I got to do a little bit more homework on what states are going to follow and piggyback the Fed. So there is potential state consequences. So I think if a deduction is disallowed for the Fed, it's going to be disallowed for the state. I think that's going to be pretty standard state by state. What's not going to be standard by state is if the forgiveness if the forgiveness is not taxable and the deductions are allowed to be deducted, is the state going to take a position that it's still taxable because it's debt relief? So we need to do a little bit more work on that, and so work with who you're working with here, and we will get those answers to you pending which states that you're operating in. How do you know if you get 8 weeks or 24 weeks of forgiveness? So I'm going to rephrase the question, I think. How do I know if I use the 8-week covered period or the 24-week covered period? So if your loan was prior to June 5th, you have the option of using 8 weeks or 24 weeks. If your loan was after June 5th or after, you automatically use the 24-week covered period. So I think for anybody who's been affected negatively, where you've had reductions of employment, the 24-week is going to work in your favor to maximize your forgiveness, if not get full forgiveness. I hope I answered that question. If I didn't, shoot me an email and I can try to clarify. Does the NOL strategy work for S Corps and LLCs so that shareholders and partners can get personal NOLs to 2015? Yeah. So the NOL strategy is not just for C Corps. It's for all pass-through entities. So if your business entity is a pass-through entity, and you can maximize the loss. Now there is a caveat with these pass-through entities is you have to have basis in order to take that loss. So you can't just create a loss, because if you don't have basis, then it's not really going to help you, right? It's going to carry forward. So if you're going down that path in a pass-through entity to create a loss, make sure that you're going to have basis. Your basis will be increased by the PPP forgiveness, in my view, because it's non-taxable income. Because otherwise, at some point in time that you liquidate, it would create taxable income, and that would not be the intent. So I would take this, I would take the same position on basis on the forgiveness as we take with, say, municipal interest or life insurance, death benefit that comes into the company. That's not taxable, but it gives me basis. And I would take the same position that the PPP forgiveness is increasing my basis, which would help you create that NOL and help you create basis to take that loss. I'm glad that was one of my fellow folks here, Stefano Slack, asking that question, because it's a complicated issue when you throw in basis and into this conversation. Because of the new form for business who's received $2 million PPP loan, do you think we should wait to apply for the forgiveness? No, I think if I'm $2 million and I get full forgiveness, I think I would apply right now, before anything else is approved or passed. It doesn't mean that you're out of the woods in terms of doing that additional assessment. I think it was with 3509, I think the form was. So I think if my loan was over $2 million today, or my PPP loan was over $2 million, I think I'm applying as soon as I can get all my forgiveness, so that no additional restrictions come in. It doesn't say that they won't still make us answer those questions on that form at some point in time, but I think I would get that started right now. What if you have an FTE reduction, but it falls under one of the safe harbor scenarios? How does that show in the application? So let me grab my application here. So I believe that on Schedule A, yeah. So if you look at Schedule A, and I wish I could bring it up, but there's all you do is check a box. So for FTE reduction safe harbor 1, there's a box that you check, and FTE safe harbor reduction 2, you check. And if you check either of those boxes, this 0.5 is going to be 1. So it's not going to reduce the amount of covered expenses that you have. Looking at the application for forgiveness, where can one find the lender's PPP loan number? I only have the SBA PPP loan number. You know, lender PPP loan number. I would think it has to be on the original documentation that you have. I actually haven't seen any of that from any of my clients. Somebody shared that with me, but I would think that those numbers have to be on the original notice that you've received. If not, I would talk to your loan officer. I am self-employed and I have not taken any money from the government. I thought I could ride this out with savings, but that's getting harder. My income has gone to zero because of the work I do. No projection when my work will be available. Should I apply for unemployment or PPP? So I wish you would ask me that question back in May, because I would have said, apply for this money. And because what we didn't know in March and April and May was how long this was gonna go on. And so my clients that are doing really, really well, that took this money, they did the right thing by taking this money, because they didn't know they were going to do well. We were in uncharted waters. So unfortunately, PPP expired, I believe, August 5th. And the sad thing about it, again, they appropriated, I forget how many billions, I want to say $700 or $800 billion in PPP loans. I believe there's over $100 billion of money that has not been allotted out, but the program's expired and you can't apply for it. So I think that if they ever do their job down in Washington, that those monies will be approved and extend the program, then you should apply for the PPP money at that point in time. That being said, for unemployment, I'm not an unemployment expert, but I would go check to see if you're eligible for unemployment income. I think this is a follow-up, and on the state tax calculation. In states of PA and Illinois, what's the effect on the forgiveness? And I'm going to write your name down, and I will get you an answer on that. I assume if you're not a client, then you're going to have to get in touch with me because I won't have a way to get in touch with you. But if you're a client, I'll be able to have your contact information. Are there any other loan application questions we need to be prepared for other than what's shown in your example? Well, I mean, on page 2 of the applications, there's a whole bunch of questions that you have to answer, but it's a lot of the certification. So I don't see anything in there that is detrimental to your application or high risk in terms of your certification. And I will make sure John Quigg gets you your answer on the PA and Illinois states. You got a good tax guy, so I'll make sure he gets you your answer on that one. So, but on the other examples, I think you're good. How do you employees that went out on medical disability during the covered period from an FTE standpoint? So that's going to be covered. Remember that. That's going to be right here. So they're going to count as a full-time equivalent because they had a disability and they requested a reduction of hours. So they're going to count as a full-time person. You're just going to have to document that on your full-time equivalent Schedule A. How do I get my hands on a copy of the applications? You can just Google the form numbers, which one applies to you, but they're all the same number, just have a letter next to them. 3508S, 3508EZ, 3508. And they are those PDFs that you can do autofill. So they're so you just Google them, or you can go to the SBA website, but they'll be there for you. And I'll make sure Mike Quigg gets you one as well. So that's the last question I have. I will stay here for a couple more minutes in case there's any more questions. Oh, one more popped up. I remember the last couple of times we've did this, I think you guys are definitely more educated on this process and more than you ever wanted to be on this process. Because I think the last time we went through, I don't know, about 60, 70 questions. So would an employee who retired in the fall, be in the same category as medical disability? I think so, because they're voluntarily retiring. I don't see why that would change anything. Is the forgiveness application a one-time shot, or if something is in question, will there be an opportunity to resubmit? I don't know if there'll be an opportunity to resubmit, but there'll be an opportunity to fix your application. So if the bank sees something wrong, I'm sure they're going to come back to you and say, hey, what about XYZ? Remember, the banks don't want this money on their books. They have right now they have this obligation on their books. It affects the amount of net capital that they have to retain in the books, but they're not earning any money on this. Now, I don't really feel bad for the banks because they got paid handsomely up front for all this money. I'm not, there's no tears here for the banks if there's any bankers on here. Do you think they will close the gray area of using payroll costs that exceed the loan amounts in regard to forgiveness? You know, I think, you know, that's one of my big questions. You know, there's two big open questions. And now the third question with the loans over $2 million, what's this new assessment form? No, and the reason why I'm going to say they're not going to change that because of one, they want this forgiveness, and some of the communication that I've seen with the AICPA is that the AICPA went back to the tax, and the SBA went back to. Let me click back up again. Too many abbreviations. The AICPA went back to the SBA and received some communication that said essentially that you could have more covered expenses than the loan amount, which goes against the intent originally back in March and April. But I believe that is not going to change. But again, that's my prediction. That's not anything you can take to court. Will they be able to review this webcast again? Yes, they will. We are recording this webcast and we will post it somewhere. I don't know where. It'll probably be definitely on our LinkedIn page. I would probably put it on my LinkedIn page, and it'll probably be on our, we'll probably tweet it out as well, I guess. Is the EIDL advance payment of $10,000 taken off the forgiveness amount? The bill says yes. However, on the application, we get to the application. It asks for your EIDL advance payment and EIDL loan amount, but nowhere on this application is it asking me to reduce, in this case, $800,000 by my $10,000 EIDL payment. So I believe it does, by the letter of the law, it does reduce the amount of forgiveness, but nowhere in the application does it go through that process. The last question just came in is how to get or print the information. I'm not sure which information you're talking about. If you're talking about my slides, we're going to email those out to you. And if you want to clarify that question better, I can answer it. But everybody will get this presentation emailed to them. Yeah, and he said, yeah, the slides. Yeah, we're going to be. We will make sure that the slides are. Anybody who is registered for the seminar will get these slides emailed out to them. I still have a fair amount of folks on here, so if you have any other questions, please go ahead and list them. Otherwise, we'll. I see some things in the chat. Are there any other loan applications questions we need to prepare for other than no? I saw that question. Is the forgiveness application? No, we saw that question. Do you think we will close? Saw that question. I don't know if I must have said 24 months or 24 weeks. It's definitely 24 weeks on the covered period, not 24 months. I think everybody started putting their questions on the chat first, not the Q&A. Yeah, somebody said they missed most today. It is recorded. It's going to be posted. We talked about that 8-week or 24-week. It's your option on the 24-week. You have no choice if you got the loan after June 5th, but If you got the loan prior to June 5th, it's your option whether you want 8 weeks or 24 weeks. Somebody said I made sense. That was nice. We have a real estate holding LLC which maintains the mortgage and charges rent to our operating company, which received the loan. There is no lease agreement and everything is treated triple net. We couldn't use the rent in the forgiveness cash calculation, correct? Could we go to the mortgage route for the forgiveness? That is my client. I will talk to you guys offline on that. But I believe that we will be able to use the we will be able to use the rent to the extent of the interest that you're all paying. But I will reach out to you. I'm going to write that down because I will lose. I will forget. Because of the new form, business who receive more than do you think we should wait now? We talked about that question. No, talked about that. Talked about that. Yeah. All right. I think that's it. I'm going to stay a couple more minutes. If any more questions pop up, I will answer them. But again, I thank you for your time. Let's hope 2021 is not as insane as 2020. It's been hard on all of us, and we're looking forward to 2021 or maybe 2022, because maybe 2021 is going to be just as hard. So you all have a great day, and thanks again for being a client of Stefano Slack. We value you and your business, and we're here to do anything to assist you in achieving your goals. Thank you.